Good morning, this is John Piper with the weekend video clip, and it's Saturday the 17th of December. I'm looking here at a chart of the FTSE hourly. Before I look at that, I want to mention that I actually have two video clips for this morning. One is this one, and the other is an interview I recorded with Proactive Investor during the week, and you'll find a link on the email. If you haven't got an email, then you can access the other video by searching Proactive Investor or Stock Tube. That's Stock TUBE, and the video I think is on the home page of that site. I'd be interested in your feedback on the Proactive interview. Anyway, can look at the FTSE chart here. Anyway, looking at the FTSE chart here, basically what we've got since the late November low is a 1, 2, 3, 4, 5. I'm not doing individual waves here. I've done this enough times, I think. We've now then got a fairly clear A, B, C, B, A, B, C. So there's a fairly good case that this was an important low, and you also notice it's right on the 50% retracement level, as I mentioned in my reports. But in fact, let's go down a chart now. This is the 10-minute chart. We notice we had a pretty good buying spike on Thursday. In fact, we saw the market probe exactly pretty much onto the 50% retracement line overnight. So we had a good rally, but then it fell back in, another good rally, then it fell back again, and so it goes. We just had this sequence, and now this looks corrective, in fact. It doesn't look like it's impulsive at all, and it does question the case of whether we're going to see a rally now. So I think Monday is probably the last chance, unless we see something on Monday. And of course, I'm very conscious of the time of year. We have Christmas next week, we have New Year after that, and we'd expect some action to the upside. The technicals, the chart patterns support upside. We're just not seeing it. And one of the big things you've got to do as a trader is pay attention to what the market's doing. Forget about your opinions. Trade what you see, not what you think, as Joe Ross said. Or I think more importantly, actually, trade what you see, not what you feel, because a lot of it's about feeling. I think it's about our emotions. Right now, it's giving us. I say the setup is to go long, but the actual action is contrary to that. Let's have a look at the Dow now. I've pretty much got the same thing on the Dow. We've got this one, a fairly clear one, and this 5 part 3, 4, 5. I mean, a little confused here, but basically an impulsive move up, which I count as a 1. They've got the same thing, A, B, C, B, a nice clear C wave decline, and now we're just diddling again. In fact, let's go down a level. Okay, here's the 5 waves. The C wave is divided nicely into 5 waves down. We've even got 5 waves up here. It all looked really good for a rally. We then got a flat A, B, C. This is what I said in my report yesterday morning. It looks like a good buy signal with stops either below here, 118.50, or below here. Well, in fact, obviously the stop reference point is there. But what we've had is market move up, and now it's just gone hurtling down again. In fact, it's negated this wave pattern here. I'll just give these arrows. So we now have looks like a corrective A, B, C, with possibly impulsive action coming in. It's actually been quite a difficult year from the point of view of trying to pick action, looking at the various indicators as I am now, as opposed to systems. It's been a really good year for systems this year. I mean, POM has continued to pull in the points really nicely. My extreme stop system has been really useful. And I would mention, if I have mentioned before, but I mention again, I am putting together this video course, 10 modules of all the systems that I've created over the years. And this doesn't include POM, obviously, because that's a separate issue. But what I'm looking for now is just a small number of beta testers, just 10 people who will get these modules before everybody else, get complete access to myself, within reasonable bounds, because I like to test these things out on other people. What's important to me is not so much that they work for me, but if I sell a system, I want it to be useful for the people who actually use the system, and that's it's a matter of explaining it properly in the manuals, that kind of thing. I need feedback on that kind of thing. So there is an opportunity for these 10 people to get in at half price at the moment. We're talking about 10 modules, we're talking about 25 years of trading experience condensed into those 10 modules, which will be delivered over a period of months. So it'll be a question of getting a module, being able to study that at your leisure, ask me any questions you want, and then once you've got that working properly, to go on to the next module, it'll be a very worthwhile product. And to give an illustration, there will be trading results going through. I would hope that 3 good trades would pay the entire cost of the 10 modules. I mean, there's not going to be a low price product, obviously, and each module will consist of a manual, including actual trades, Camtasia clips explaining how the thing works, plus video clips as well. So it's a fairly major work from my perspective, but it's work I enjoy doing. Anyway, so I'm looking for 10 people, so please email me if that's of interest to you. Going back to this chart, the big problem we have here, and let's go back to a slightly longer range chart. This is the daily chart on the Dow. Okay, we've got a clear ABC, and then we've got another ABC to here. Now, what's happening here is because obviously this is also an ABC. I mean, the whole year is a massive ABC, as I've said before. If this rally is the end of it, I mean, would it be neater to make new highs? But you do get failures. Maybe this is some kind of fifth wave failure. I mean, this could be. It hasn't got the tone of it yet, but the wave patterns actually could be impulsive. I'll just expand this slightly. So what we could be seeing is a 1, 2, a 1, 2, another 1, 2, with this ABC as a 2. And so we could now see a big sharp fall. My big concern really is to get on board these moves. The extreme stop system does that. One thing that system guarantees is you catch all the moves. And it's but it's the kind of system you have to watch what you're doing. It's not something you can use with alerts. You have to really understand the system and then use it. But also, I want to be positioned in ETFs. I don't want. We're currently short of the ETF on FTSE, but only 50%. I want more than that. I really want to be positioned by the end of the first week in January. So, although there is still a case for some upside, there is this slightly alarming pattern which could, suggest quite a big fall into Christmas, and in fact, a continuing decline from now until sometime next year, which I guess would be quite a big shock because people, markets don't normally fall away at this time of year. But the chart patterns are beginning to show that, so that is certainly a worry. Let's have a look at pound euro now. Okay, we're now seeing the breakout here. So we've got the 1, 2, 1, 2, and then the 3 waves come in. This is now wave 3, 1, 2, 1, 2. So we're in the third of a third. It's not that dramatic. I mean, the extreme stop system gave a buy signal here, put a stop in there, entered long, and that's but we're only a cent up. It's not 100 points, but 100 basis points. But it's not a huge move. Then currencies don't tend to move that dramatically because the powers that be don't allow them to. The problem is, I mean, the 87 crash was caused by a currency disruption. If the currencies do start to move too forcibly, major moves can come in very quickly. It does cause a lot of disruption to international trade, for example. But I think 120 is a given. 1.25 is certainly on the cards here. I think. I would think we're probably going to see a major pullback before we go. Well, between 120 and 125. I won't be surprised to see it above 130 at some point, but that's probably sometime in the future. But I think currently it's looking very negative for the euro, and the move has now started. So I guess that could drive. Well, I mean, it could easily drive equity prices lower, and the whole Christmas thing could just be blown away in the there's not more important things happening in the world than Christmas. Or maybe I shouldn't say that, but it's as far as markets are concerned, markets are about money and fear and greed, if things start to happen, then the feel-good factor is just not going to be there, I don't think. I think Monday morning is quite critical. This, especially, it wouldn't normally be the case given the time of year, but it possibly is the case in this particular instance. Finally, a quick look at the VIX. Okay, this is a Yahoo Finance chart. I find Yahoo Finance very, very useful, actually, some of their charting. And if you want the URL of this particular chart, please email me. I'll let you have it. Now we bought the VIX during the year around between 15 and 20, and we got out I think between 40 and 45. It was a really nice trade. Bought it by the ETF. I think about 120% up overall. In fact, we did better than the actual price difference. I think probably because the volatility increased. Like other markets, if volatility increases, then there's a further amplification in the price. However, it's now come down to below 25 just. In fact, still falling interestingly, and I think it's time to buy again. Interestingly, the ETF price hasn't gone down correspondingly, which again could be a volatility thing. So I made decide to buy this by IG, in fact, where the prices may more accurately reflect the. And also, of course, the December future's just gone, so we've got the March future coming in place now. I mean, it may be the March future has a great big markup, but because of the volatility, that remains to be seen also. But I am looking to buy the VIX certainly, and I'll send out an alert if I think the time is right to do that. Again, it rather depends on what happens over Christmas. Again, it's quite important. I would have thought that the VIX. I mean, normally you see the VIX decline into the new year, but it may be different on this occasion. Okay. Right. Please come back to me if you're interested in beta testing the new system. Also, be interested in your opinions on the proactive video. I find that quite a useful format. I'm actually trying to create my own sort of home studio to record videos so I can actually appear in person, as it were. But that's hitting a few teething problems. If anybody has any camera experience, it might be useful. Anyway, that's all for now. If you found it interesting and useful, have a great weekend. I'll be back on Tuesday morning with a report, and on Monday, if anything happens. Well, I may meet on Monday, depending on what actually happens. Bye for now. Thanks again.